Hey everyone, and welcome. When we think about getting a home loan, our minds usually jump straight to the classic 30-year fixed-rate mortgage. It's the old standby. But what if your financial life isn't so standard? Today we're going to crack open the homebuyer's financial toolbox and look at some specialized tools that might just be a perfect fit for you.
So let's just ask it straight up. Is that one-size-fits-all loan really the best move for everybody? Well, the short answer is a big no. Honestly, depending on your job, where your income is headed, or even how long you plan to live in a house, a different kind of loan could literally save you thousands. So let's see what's in the box.
Here's what we've got on tap. We'll start with the big picture, then we'll dive into 4 key types of specialized loans: the flexible ARMs, the high-stakes balloon mortgages, jumbo loans for those big buys, and a really interesting convertible option. And then, at the end, we'll lay them all out so you can see which tool fits into your financial blueprint.
All right, first up, mortgages beyond the standard. Before we start pulling tools out, let's just quickly set the stage and figure out why you might even need something other than the default choice.
Think about it like this. You wouldn't use a hammer for every single job, would you? The same exact logic applies to your finances. That 30-year fixed mortgage, it's the hammer. It's reliable, it's great for a lot of things. But for certain financial projects, you need a different tool. And that's what this is all about, finding the right tool for the job.
Okay, first tool out of the box, the flex loans. And as the name kind of hints, these are for buyers who need a bit more flexibility than a standard loan offers. This is especially true if you want a lower payment right at the start and you know you're not going to stay put for 30 years.
So our first tool is the Hybrid Adjustable Rate Mortgage, or ARM. It's basically a loan in 2 acts. You start Act 1 with a fixed, usually lower interest rate for a few years, like 5, 7, or 10. But then, after that intro period is over, Act 2 begins, and the rate starts to adjust, usually every 6 months or so, based on whatever the market is doing.
So here's the trade-off, right? The big pro is that you get a lower monthly payment right out of the gate, which might even help you afford a more expensive house. But, and this is a big but, the risk is very real. Once that cozy fixed period ends, your payment could shoot way up. It's a calculated gamble on what your future looks like.
So who is this actually for? Well, it's pretty much perfect for 2 types of people. First, someone who knows they're going to sell the house before the rate ever has a chance to change. Second, it's great for someone who's confident that their income is going to grow, so a higher payment down the road won't be a problem. If that's you, an ARM could be a really powerful move. Now, it's also worth pointing out there are other, way riskier types of ARMs out there. You've got interest-only ARMs, where for a while you aren't paying down your loan balance at all, and then there were payment option ARMs, which were so risky they pretty much vanished after 2008 because your loan balance could actually go up. These are definitely not for the faint of heart.
Okay, let's grab our next tool. This one also offers those tempting low payments, but it comes with a massive catch at the end. Welcome to the high-stakes table.
This is a balloon mortgage. With this, you make pretty low fixed payments for a short time, maybe 5 or 7 years. But here's the kicker. At the end of that term, the entire rest of the loan is due, all at once, in one giant balloon payment.
The appeal is super obvious, right? Your monthly payments are predictable and way lower than a standard mortgage. The downside, however, is a monster. You're basically betting that when that huge final payment is due, you'll either have the cash to pay it off, or you'll be able to refinance into a new loan. That's a big bet.
And I really cannot stress this enough. If interest rates have gone through the roof or banks just aren't lending like they used to when your balloon payment is due, you might be stuck. You might not be able to refinance. This is, without a doubt, the single biggest danger of this loan.
All right, let's pivot a little. We've talked about managing risk. Now let's talk about sheer size. What happens when the house you want is in a super expensive area or it's just plain big? For that job, you need a completely different tool.
Meet the jumbo mortgage. This is the heavy hitter for when you're buying a property that costs more than the standard lending limits. Those limits are set by federal regulators, and for 2025, a jumbo loan is generally anything over about $766,000, though that number can be higher in expensive areas.
Now, because the bank is putting up so much cash, they're going to look at you under a microscope. To get a jumbo loan, you're going to need a stellar credit score, very little other debt, a good chunk of cash saved up, and a pretty hefty down payment.
So we've had flexibility, we've had risk, we've had size, but what if you want a little bit of everything? What if you want that flexibility now, but with a safety net for later?
This is where the convertible ARM comes in, and it's a really cool piece of financial engineering. It starts life as a normal ARM, so you get that nice low initial rate. But, and this is the game changer, it has a built-in option that lets you switch it to a fixed-rate mortgage later on without all the costs and hassle of a full refinance.
Let's make this real. Here's how it could play out. Say you start with a 5% rate on your ARM. 4 years in, you notice interest rates are climbing, and you decide to pull the trigger and convert. The lender takes the current market rate, let's say it's 6.25%, adds their standard margin, and bam, you now have a fixed rate of 6.75% for the rest of your loan. You've locked it in.
Okay, we've pulled a bunch of specialized tools from our kit. Now for the most important part. Let's line them all up on the workbench, side by side, and see how they really stack up against each other. Think of this as your quick and dirty guide. The hybrid ARM, that's for the short-term owner. The balloon mortgage, that's for someone who's expecting a big chunk of cash to come in. The jumbo loan is for the high-income earner buying that dream house. And the convertible ARM, that's for the buyer who wants the best of both worlds. Initial savings with a safety net for the future.
So, when you boil it all down, the real takeaway here is that the best mortgage isn't some universal thing. It's incredibly personal. It all depends on your life, your career, and your plans. So the question I'll leave you with is this. Looking at this toolbox, which tool is the right one for your financial blueprint?